So getting somebody's private key, I can get all your money.
Yeah, not for real. But not even a joke.
No.
If you gave somebody your private key, move all your money today. Because now that person has access to anything that uses that private key. Right? That's worse than a password because you can't change it. You need to just get a brand new account.
Can I walk into a DeFi bank like I can walk into a centralized bank?
No, you can't.
No, it's like all online, right? Or all
online. So you can't walk into a bank the same way? Only because nobody's made an office. Like, honestly, like, can you walk into Robinhood right now? It's a real bank. You can't walk into Robinhood either.
No.
So if Aave decided to make an office, you could walk into Aave's office.
Okay.
But still, all the stuff will still be happening digitally.
That's why banks weren't gonna have no money because they're paying for a spot.
How can people protect themselves from like all the risks that DeFi comes with?
By having enough knowledge. Because like I said, it's really easy to be like, oh, look at this new protocol I've never heard of before. Let me go ahead and give them my money. Oh, they ran away. Oops.
Check me. We live in our phones, but what if we can make them? Got every app in the world, where's the participation? Looking for representation. Don't overlook the pavement, Silicon Valley was patient. So join the movement, we ain't got too much time to be wasted. I said it's deeper than cold. Vibe with me, yeah, it's deeper than cold.
Hi guys, and welcome back to Deeper Than Code podcast. I'm Chrissy.
I am Shelby, and this is
Big Papa Code.
And today we are talking DeFi drama. Bankers beware. First of all,
DeFi.
What is DeFi? Because what is that?
Just leave it that way.
DeFi, because what is decentralized banking? What is that?
Decentralized finance, exactly.
Yep, there was let's get to it. I'm new here, guys.
Exactly. You're the point of view character.
Yeah, here we are, because I need help. What is this?
But decentralized finance essentially is, to take the two words, decentralized and finance is basically a way to do that where you could do finance without having to rely upon middlemen. It's really like the main idea. Like right now, if we look at centralized finance, right? Which is kind of like what we have now, like our regular TradFi, traditional finance world. Yeah. If I want to, let's say, go and create a bank account, I want to have money in general, I have to get permission from, Chase Bank or Truist Bank or something like that to hold my money and to allow me to do these transactions, et cetera. When you have decentralized finance, there's no middleman involved between you and your money. You can store it, you can send it around, you can do things with it, et cetera. That's like the most untechnical way to kind of discuss it. And we'll probably get more technical as we ask more questions, but just to kind of that's the main idea.
So why is it shaking up traditional banking?
It's shaking up traditional banking because the way the banking system works now is you have to have middlemen. Like if I want to buy a stock, like if you go buy stocks right now, right? You can't just buy a stock and just hold it yourself. For the most part, you have to go through a third party, provider in order to do so. When it comes to decentralized finance, you can hold assets yourself without having to rely upon a third party. I can send assets to other people without having to rely upon a third party to do it for me. Like I have the power to make decisions about my finances in a different way.
Okay. And how does that work?
It works because you heard about all this crypto stuff?
Yeah, we talked about that in one of our episodes before. Mm-hmm. But yeah, so I know how that works. So what's next?
But that's where DeFi comes out of, right? That's one of the applications of blockchain technology. And one of the reasons why it's so powerful is because as Black people, there's a lot of people probably know about all the different, redlining stuff that's happened. And, and there was, you have to get permission all the time in order to do stuff. But the way DeFi works is permissionless. That's like one of the big, tenets of it, where if I decide I want to engage in transactions, I don't need a third party or a nation state like America or China or something like that to give me permission to start doing transactions. Right. I can do them because I want to. And that sounds like there's more anarchy and stuff like that, but not really, because the great thing about the way that blockchain works is there's these things called smart contracts that, for example, Aave is like a DeFi bank. Aave, right? I've got a lot of money in Aave right now. Matter of fact, if Aave were to fold right now, I'd be really stressed out tomorrow. I have enough money in there that I'd be like, damn, that hurt. Like if I couldn't get my money out of Aave.
How did you build trust in that though? Like,
because I'm a software engineer, I can read code and I can read all their code. Because that's the thing. Because when you have these DeFi banks, they are governed by the transparent smart contracts. So anybody can audit and see how they're supposed to interact and how they work. And I can use Aave without them needing to know who I am or anything like that, as long as I have capital and I want to put it inside your bank, and then I'm going to get yield from it being in your bank, because actually we're in a partnership. Anybody uses Aave, they lend money, right? So when they lend money, they charge an interest rate, and you get part of that interest rate comes to you. And there's nobody in between, right? So there's just the protocol and you, right? Which is great. We're showing the way that, the regular banking system works. We know it doesn't work exactly like that, even though that's what they do. We put our money in the bank and they lend it. Right. That's why they got money to give out money for mortgages and all that. They're using our money to do that. And they only have to keep 10% of the money that they're lending out. They have to keep 10%. They only have to keep 10% of their deposits, I should say, in the bank at any time. So let's say if they've got $10 million worth of stuff, they only got to keep $1 million. And they can lend out all the rest of it, blah, 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 blah. That's why a bank run is so bad. If a bunch of people come in, try to get their money, because they don't have all of it. Wow. Like all the money that you put in there, they don't have it. They already gave it away.
It's crazy, though. That's crazy.
That you can go get all your money out of the bank right now, as long as everybody isn't trying to get all their money out of the bank. If everybody tries to get their money out of the bank, the bank's going to fail. But Aave, for example, like they have all that, like they have to keep their reserves or not. Then they don't have fractional reserve banking in that.
So where's the money at? Like, what do you mean?
The money's not there. They gave it away. It's like this, right? Let's say
Bank of America.
Look at it this way, right? Let's say you and you, right, and me, three of us is perfect, right? Let's say you got $1,000, but you think for some reason that it'd be better if you gave it to Shelby to hold it, right? So Chrissy, you had $1,000, you gave it to Shelby. Shelby's going to hold on to the money for you, right? That's what you're doing with the bank. You give it to them, and now you say, Arthur, you need $1,000, huh? Right? Well, here's what we're going to do, right? I'm going to charge you $1,200 for the $1,000 I'm going to give you, but you're going to pay me monthly. So you're going to pay me $120 a month until you give me back $1,200 for the $1,000 I'm going to give you. Right. And then you hope that Chrissy doesn't come back and say, where's my money? And you do that to enough people and you got a business, because now you're making money on my money. Well, you're making money on Chrissy's money. So you're making money off of me you're making money off of me because I was broke. You're making money off Chrissy because Chrissy had a bunch of money, but couldn't hold it all in one place because she couldn't hold all these dollars in her house. It'll be safer with you, right?
Yep, that has happened before for sure.
So Chrissy gives her money to Shelby Bank, and Shelby Bank gives her money to Broke Arthur, and at 20% interest, and I have to give you back $1,200. And now you made $200. And then here's the thing. Chrissy still doesn't ask for that $1,000 back because she just wants you to hold on. She might take 5, she might take 4, 3 here and there, whatever. Most of the time, it still stays in the bank.
Right.
And then now you got the $1,200 back from me now. And now you look and say, Zach, you need money, right? You want to borrow $1,200? I'm going to give it to you for 15% or whatever the case may be. And then now that turns into $1,380. And then it turns into this, and then it turns into that. And they just keep doing that over and over again. And they just
make all the money.
Make
you
all
just
the
make
money.
that make so much sense.
And everything works as long as too many Chrissies don't show up at the bank at the same time and want their money all at the same time. That's why a bank run is an automatic way to shut a bank down. Like if everybody just decided to show up at Bank of America and say, give me my money tomorrow, Bank of America folds because they don't have all the money. And it ends up being worse. It's actually not bad. If it only happens to Bank of America, it's not bad for poor people, because poor people will get their money back because the money's FDIC insured. Right. So if you have less than $250,000 in the bank, or whatever it is right now, right, then you don't have an issue to worry about. Right. They're like, you're going to get the money. Now, if you have more than that in the bank that's not insured, right, so you got a lot of money, you're only going to get insured up to that amount. So if you had 20 million in there, you're only going to get up to the insured amount.
That's crazy.
Yeah, it is kind of crazy. It just happened with Silicon Valley Bank not that long ago.
Hey, so it is best to just keep your money like in the mattress.
No, it's not. It's not best to keep your money in the mattress, because that's a bad idea.
Your house can catch on fire.
Yeah, your house catch on fire. You're better off, especially, I hit the microphone. but but it's best, especially if you don't got that much money anyway.
So if you put like, say, like the insured amount is $300,000, if I put $300,000 in like different banks,
yep,
I'm gonna get all that back.
Yep.
Okay, that's smart. Do that.
Exactly. That's actually the better thing. Like go buy a house or something like that. Buy tangible things. Mm-hmm. At the end of the day, money is garbage anyway.
Yeah.
It's actually not anything. It's just that just keep it because that's the only way that I could do business with people or whatever, But honestly, the assets are better to have. Assets that actually make money.
Like a cow.
I guess you can make money off a cow.
You can.
I mean, you 100% can make money off a cow, but, more like land, real estate, stuff like that. Think the assets that cash flow, like, laundry mats,
laundry mats,
yeah.
Now we're talking. Whoa.
See, I spread it right to you. But I think we're just both clumsy, right?
Yeah.
It's
okay.
That's crazy.
Okay, I had a question. So should us regular people be concerned or care about decentralized finance?
Should care about it. And here is the thing. I can't say for a fact that DeFi is going to be the norm because right now there is like an existential crisis happening right now in like the financial system where like
Tell me about it.
Yeah, where people are fighting back and forth. The SEC every single day is trying to shoot down DeFi. They're trying to find different DeFi platforms and trying to find reasons to get rid of them or make them illegal or put people in jail or whatever because that's what the SEC wants. I shouldn't even say this out loud. I don't want them targeting me. Like I don't want no beef with the SEC.
Yeah,
I ain't got enough money to fight with them. But at the end of the day, that's what they want. They don't want DeFi because it's easier for them to regulate, centralized things. They can have a person to blame things on. They like things like that. The government likes things that are centralized because they could say, Bank of America, you messed up, right? When it's decentralized, you can't really do that the same way. At least you can't do it with the same efficacy because you can't be. It's not really like a centralized bad actor to point to when something goes wrong. And the way that the laws are set up now, you have to revamp a lot of them in order to like try to do any like proper regulation. They just rather stuff just stay the way it is, even though there's other countries that are embracing this right now and are going through the growing pains to make it better and make things more performant and faster, etc.
Like where?
Plenty of countries. Like El Salvador is definitely like they bought like a whole bunch of Bitcoin or whatever the case may be.
Wow.
They buy Bitcoin like every week or some ridiculous like that. And then you have like these couple of Caribbean islands are like safe havens for like people that want to transact that way. You can do a lot of stuff in Dubai. You can't do in other places too. Like a whole bunch of stuff.
You can do a lot of stuff in Dubai.
You can do a lot of stuff in Dubai.
You can do a lot of stuff.
I might need to move there, to be honest.
Yeah, and a lot of people are moving there. Like I follow a lady on TikTok who live there. Her and her husband, they're doing great.
Yeah, I might need to move there. Yeah, I'm definitely. I'm gonna probably live in Dubai before 2032.
Oh,
don't forget, I asked you, were you doing any adopting? I know you don't want to have another kid, but I'm not a newborn.
All right, you take care of yourself, right?
I take care of myself, and I come with a kid.
You come with an extra kid.
I come with a kid, yeah.
Okay, cool.
So, like, are banks scared of this?
Banks are 100% scared of it because at the end of the day, they know it is more efficient, right? Like, I get better interest rates in DeFi. I get better transparency. Like I know what's happening with my money at all times because I can see it on the open ledger. So I know what's occurring. I can also see right now if I go on right now and look at the mempool and look at all this different other stuff and look at the wallets that Aave has, et cetera. I can see that they have the reserves. I can physically look at it. I don't know if Truist has my money. I hope they do because I have a bunch of money in there too, and I don't want them to lose it. But whatever. Like I can't tell. I don't know that.
Yeah.
But I can know that at all times, like in a decentralized space. But there definitely is, some drawbacks, some negatives. But I think
I was going to ask about that. So, what are the biggest risks?
The biggest risks are, there's hacks. Things are not FDIC insured, so you lose it, you ain't getting it back. You know what I mean? Like all those different problems that exist. Scammers, yeah. It's very easy to not get scammed, but very easy to get scammed.
Oh, okay.
It's easy for both because it's very easy, like if you know what you're doing, to be like, it's like think about this, right? If a Nigerian prince sends you an email right now, you ain't gonna talk to this Nigerian prince, right?
No.
Exactly.
I would. Huh?
An email?
An email from a Nigerian prince that says that you need. Never mind. Don't.
Oh, never mind. No, I wouldn't do that.
No.
Now, an Instagram DM, maybe.
Don't answer Instagram DM either. Please don't. Like I said, if you know you're not supposed to do that, right? You know not to do the thing, right? But if you don't know what you're supposed to do, then somebody can easily make you do something wrong.
Okay.
Right? The more information you have. Like let's put it this way, right? When I was a young boy, right?
Young boy.
Many moons ago.
You know what? I'm a little bit trusting, right? And my wife makes a joke all the time. You know, I saved you from all these women because, you know, they're vultures out here. Everybody's talking about how men are so whatever, but these women are evil. I was evil. Like she even talked about herself. I was evil, blah, blah, blah. But you're so nice and wholesome. You just want to help people. And it's true. It's true. I'm so nice and all this stuff like that.
Yeah.
Right. You know, and I got taken advantage of in high school plenty of times. Oh, my God. Just in retrospect, thinking back, I'm like, yeah, that was dumb. I was tripping. Why did I do that? Yeah,
I hope all those girls are doing bad right now. Don't ever.
But what I'm saying is,
I hope all those girls.
I didn't know what I didn't know at that time, so I was able to get played. But once you actually got the knowledge, like I'm pretty sure you think back, you probably, I'll never let them do that to me again.
Yeah,
you know what I'm saying? Like,
don't get played. You know,
you know what I'm saying?
It's okay, but now you have game.
Sure, let's say that.
But you won it though.
Yeah, exactly. You won the game. So, but you get where I'm going with that?
I get where you're going with it, yes.
So if you know the game, you're not going to get played in DeFi, right? Because most of the stuff that's like bad that can happen to you can only happen if you let somebody talk you into doing something dumb, right? As long as you know not to do that. Like, yeah, in order for me to help you, I need you to give me my private key. No, nobody sees your private key except you. You never show it to anybody. So as a matter of fact, I'll tell you right now, if you get into DeFi and anybody says the words, yeah, I just need to see your private key to help you, they're scamming you. Because there's never a reason to show another individual your private key in any way.
So getting somebody's private key, I can get all your money.
Yes.
That's your no-no zone.
That's your no-no zone.
You done saved somebody's life.
Yeah, not for real. But
somebody literally just did it right now and was like, shit, I shouldn't have did that.
Yeah, but now you need to go you need to move all your money today. Not even a joke.
No.
If you gave somebody your private key, move all your money today. Because now that person has access to anything that uses that private key. Right? That's worse than a password because you can't change it. You need to just get a brand new account, essentially. So yeah, so certain things like that, or whenever you interact with a smart contract, right, you have to give that contract permission by signing it, right? So you have to sign over your stuff to them. So if you read it first, you'd be like, oh, I don't want to interact with this contract says it'll just take all my money. Why would I do that?
Yeah.
You know what I'm saying? Like those things, as long as you know that, and when that's more common knowledge for people, then, you know, they won't get scammed. And then there's also stuff like Sam Bankman-Fried, right? Where we know all his stuff with all his crypto scams, but that's not real crypto. That's the problem, is that people didn't want to do real crypto. So what they do when they don't want to do real crypto, they give their money to crypto banks like his thing, which is basically just a bank. They just hold your crypto, which is worse because banks already are bad. Banks are evil. They're evil. I don't care what anybody says. They're evil. I'm just going to objectively say banks are evil, and that they are, right? But there's a whole bunch of rules that stop them from doing certain things. Crypto banks don't got no rules. So you just do whatever the heck he wants until he gets in trouble. Because basically what you're doing is you just said, hey, hold my crypto. No rules in place, nothing that guarantees you got to give it back to me. There's no laws, nothing that makes anything happen. And, you know, until somebody does something like Sam Bankman-Fried, they're thinking like, now we got to make rules and stuff.
Yeah.
But that's not real crypto. That's you giving over your stuff to them. So, you know, like if you ever heard the statement, not your keys, not your crypto. Like if you don't have the private key, it's not yours. And you're just hoping the other person does the right thing. So, but you can custody, but especially back in the day, like in 2010, 2012, 2013, that was like you needed that more because it was so hard to do anything. In 2024, only thing that makes you need to give your money to like Coinbase or something like that is because you're lazy or because you really want Coinbase to give you a higher interest rate or something. Like, that's it.
So tell me this, can I walk into a DeFi bank like I can walk into a centralized bank?
No, you can't.
No, it's like all online, right? Or all
online. So you can't walk into a bank the same way? Only because nobody's made an office. Like, honestly, Like, can you walk into Robinhood right now? It's a real bank. You can't walk into Robinhood either.
No.
So if Aave decided to make an office, you could walk into Ave's office.
Okay.
But still, stuff would still be happening digitally.
That's why bank people ain't gonna have no money because they're paying for a spot. You feel me? They're paying
and
rent.
they're using your money to pay for it.
Yeah,
you gave them the money so that they could pay their rent.
As they're saying no to your loan.
Saying no to your loan.
That's crazy. They don't even have their money. Well, question. So what should we get ready for? Like, what are some of the new, I guess, advancements in DeFi that like we'll see in the near future or today?
Well, they're here right now. So a lot of the things that are available right now, man, should I say all this stuff?
Yes.
I mean, we're here.
Give us all the tea.
Okay. This is not financial advice. So a couple of things that you could do. Once you actually figure out how to do the basics of crypto, I don't have time to talk about all that, but there is some protocols that actually are very, very well put together, and there's a lot of money in them in the sense of, if you already are into making money. So like, for example, there's a protocol called Thales. I've heard people use a lot. And
It's called Thales.
Thales, Thales. Right, and Overtime is another one, overtime.xyz and Thales. I think it's IO. And essentially the way Thales works is what you're doing is you're buying options on crypto, but the way that it works is it's not like options like traditional options like you do on Robinhood or whatever, and they go up and go down. You're literally just making a decision on like, do I think that Bitcoin is going to go up tomorrow or not? Or go up in the next week or not. Like, I think it's going to be over this price or under this price.
Not as FanDuel.
Huh?
It's like FanDuel.
Yeah, sure. It is exactly like that. So
That's crazy. I can do this.
You just basically, you make that pick. You can read the charts or whatever and decide what you think is going to happen.
Yeah.
Yeah, and so you do that. And essentially, if it goes if it hits the price point that you think it is going to hit, then you're going to get a payout. Right. But here's the thing that's good about it is that first they explain, the likelihood of it going up or going down based on the price. And they also give you a kickback no matter if you're right or wrong. So what they're doing right now to incentivize people to use it is that every single time you like all of your volume, they kick back to you in the Thales tokens. You should get Thales token for free for being around. The other thing where you can really make the money, that's not the part where you really make the money. That's just people betting. But I'm just saying that's how it works. The way that you actually really make money off of it, which is the point that I was going to make, is that you can actually provide the protocol with the money that they're actually using to make the bets, right? So you actually fund the pool. And then as it makes money, you get paid for people betting at the end of the day. So you're actually the one part of the process of the people, supplying the money, like you're the liquidity provider.
Wow.
And so that is where there's a lot of money. And that's like the number one place to make money in DeFi. Not the number one place. Thales they have really good interest rates right now. Like, matter of fact, Thales, I think right now they're probably giving like 30% interest rates or something. It's like 30% interest or whatever. But that's the thing. Like, and of course you can make money off the bets. If you're good at figuring out what's going on, you're good at options, you're good at reading charts, you could just make money in general off of the fact that I think it's going to hit, I think it's going to go up. And boom, there's $20 for you, $100 for you, $1,000 for you, depending on how much you put in. But you can only make as many bets can be made as much as what's in the bank. So, and like any good casino, at the end of the day, if you want to look at it like a casino, Thales always wins for the most part. Like, only a few people are actually beating them. And like I said, you're just
I'm going to be the exception.
Yeah, I mean, you wouldn't be the only one that's winning, but I mean, you could definitely go in there and do that. And then there's other protocols or whatever that you could be a liquidity provider for as well. Like a one that you can't make as much money with, because Thales, you can literally like make a lot of money on Thales and Overtime. Overtime is basically exactly like FanDuel. You could just bet. I think LeBron James is going to get 10 rebounds today. And you could be a liquidity provider for Overtime. And as people make those bets, like you're the one that they're, betting against. You could basically put it that way.
Yeah, that's definitely going to be your Chrissy thing.
Yeah, I'm looking right now. I wonder if they're going to do the summer league.
So will we say like DeFi is like a fairer banking system?
It definitely is fair because at the end, anybody can access it. And like I said, there's plenty of protocols or whatever that you can be liquidity providers for, like Uniswap or whatever. And that's just like trading assets, right? Like I have milk and you got eggs and we want to trade milk and eggs. Uniswap lets you trade tokens online for very, very cheap. But those fees that come in from them actually making trades, they have to be facilitated by somebody having put their money down at the end of the day so that there's money to like make the trades. And if you provide liquidity to that, every time those trades happen, you get paid.
Are there any inequalities in this, like in the DeFi system?
There can be inequalities. One, also, if you ain't got no money, you can't do anything. You know, that's a thing that always happens. But nobody can stop you and say like, oh, you're Asian or you're black or you're a woman or you're this or you're that, can stop you from transacting. Like there's no there's nobody that says like, if I want a loan from Aave, for example, talking about Bank of America disapproving your loan, I take loans out from Aave all the time because I don't be wanting to use my actual money, so I take the loan from Aave or whatever, or from a couple other ones. Mostly I use Aave all the time. And at the end of the day, as long as I met the criteria for what the smart contract said I had to have in order to get the loan, I have the loan.
Oh, wow.
So it's really, if I wanted a loan from Aave right now, I could just go and boop, 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 psh, money in my account.
Today?
Yep, right now, in moments. Because all it would do is check, boom, boom, here you go, here's your money.
I'm at the wrong bank.
Yeah, but you have to have money in order to do that.
Yeah,
like,
I'm at the wrong bank.
But yeah, like, I wasn't saying like,
yeah, no,
I wasn't saying like that. I wasn't saying like that.
I'm just saying it again. I'm at the
When you say you have to have money, though, what are we talking though?
Just any money in general. I'm just saying like
you can go there with like $1,000.
Yeah, you can go there with $1,000 and
make money from it.
Yeah, but yeah, Aave, if you put money in Aave, they're going to lend the money out, and you're going to get an interest rate for that. And if you want to take out a loan and be one of the people that actually takes the loan out, you have to have, they look at your net worth, that determines how much you can take.
Like your real net worth, not the Google stuff.
No, your DeFi net worth. They look at your wallet. Like they don't know if you owe, all these random people money. They just know like, all right, how much stuff you got. All right.
Just here.
Yeah.
Oh, I think that's
pretty cool. Yeah.
Yeah. They don't go like no background checks or none of that.
No background checks. They don't know who you are, nothing about you.
Damn.
I like what?
Aave.
Aave. I was going to say agave.
Crazy.
AAVE.
AAVE. Typing that up right now.
Yeah, and like so, they have great interest rates, and you can and they'll give you USDC, which is the US dollar coin, which is basically just a stable coin that just matches the US dollar. So, or you can borrow other stuff too if you want, but that's like probably the best one to do that or USDT. But I don't want to get into
That's another bank, USDC?
No. That's still all Aave. I'm just saying that's the different assets you can like borrow back from them.
So maybe one day we can do an episode on like a one-on-one class for Aave.
We could.
Maybe.
I'll put a whiteboard right here.
Because you definitely need your board. You need your charts. You have to see these things.
Yes.
Perfect. I love that.
As long as the studio's going to let me bring all of it. I'm going to have to bring it like before and leave it. Y'all got storage? Yeah, I don't know.
So that's crazy. How can people protect themselves from like all the risks that DeFi comes with?
By having enough knowledge. Because like I said, it's really easy to be like, oh, look at this new protocol I've never heard of before. Let me go ahead and give them my money. Oh, they ran away. Oops. Nothing you can do about it.
Yeah, because everything you just kind of just told us, like they don't do like any background checks. Like I'm one of the people that's like, I'm about to go sign up. So
Aave, you'll be fine.
Okay.
Vetted already. Okay. Aave, you'll be fine. And if we ever not fine, we're all going down together.
Oh, I don't want to go down.
We don't want to go. We don't want to go down.
I think you about to say we're going to build an alliance. We're going to go get them. That's what I'm thinking. We about to say, but go down together.
Oh, well, you know what?
My vision.
Here's the thing. The person that made the Aave protocol is very much a public figure. And
who?
I can't remember his name right now. Oh my gosh, I'm bad at saying people's names.
We have to get you a notebook.
I know, right? I'm bad at saying names.
AAVE.
AAVE. He's got like a Germany sounding name or something like that too. Like, but like, and he also made a like a decentralized version of Twitter too that he made also.
Threads.
No, not Threads.
Oh.
Threads ain't decentralized. That's Zuckerberg.
I'm screaming. Did you find it?
No. Okay, owner, founder.
Yeah, I'll just say Aave founder. What's his name?
Stanny.
Yeah, that sounds right. Yeah.
Stanny.
Yeah, Stani. Yeah. But like I said, he's on Twitter a lot at the end of the day. Like, that's all, like he's not like the person that made Bitcoin. We don't know where that guy, where Satoshi Nakamoto is. We don't know where that guy is. If he even exists, or if he's like a group of people. Satoshi Nakamoto, that's who made Bitcoin. Right? We don't know. We don't know if we don't
know if he's real. Yeah.
We don't know if he's real.
Yeah. I heard that man name before.
All we could do is read the code and be like, well,
this is like Bob from MySpace. Like, we don't know if he's real.
We know he's real.
He's not real.
Tom
and
is
his name
real.
was Tom over here. Like, who's Bob?
I knew you meant Tom. But Tom is 100% real, and Tom sold MySpace for like $300 million, and then like went off into the sunset.
Where is he?
He's just living his life. He's on social media. He's got a following and everything, and he just goes around taking photos and just.
He has a new picture.
He does have new pictures.
I have to find this. Hold on, wait.
Yeah, you know that picture is a screenshot of him actually drawing out on the board how MySpace works.
Really?
Yeah, so he was.
No, he has the same picture.
He probably. I mean, that's because people. He has other pictures.
That's his whole aesthetic.
But at the end of the day, he made $300 million and dipped. That's the American dream right there.
Yeah.
I wish I could make $300 million and dip. I wouldn't be able to dip though. I'd have to do some stuff.
Like what?
I don't know. Try to save the world. I don't know.
Okay, Elon.
Yeah. I guess Black Elon.
That's a nice ring to it.
I'm on this man's Instagram. Are these places he's traveled to? I'm gonna have to read the comments because now I'm like invested. It's just like, wait, what are you doing?
He says the former first friend
playing with my drone in the Maldives. Playing with my drone.
He doesn't do anything. He made $300 million. It was like, why do I have to keep doing life? Like, I'm done. I won already. I'm just gonna go do stuff.
Yeah.
He doesn't invest. He just has a bunch of money in the bank and just. It's like when you watch one of those like TV shows, like the main character like gets their final score and then like kind of like rides off in the sunset and they don't worry about nothing anymore. Mm-hmm. That's what he did.
Like The Hills, Lauren Conrad.
That's what he did.
Listen, I know I'm so invested. Wait a minute. This man has been living in Hawaii, since he retired in 2010, just part-time living there, part-time. And he's out here just using his latest GoPro with models, having a good time. His name is MySpace Time.
Exactly. He made $300 million and was like, or 200, which one is it? Who knows? Too much money. He made substantial generational can't mess it up wealth unless you do something dumb.
Oh, it was actually $580 million.
But that's how much they sold it for. But
how much did he make from it?
I think it was $300 million, right? Because he had a majority stake, right? So I think it was $300 million that he got. Or maybe he made 580 and it was $1 billion sold for. Who knows? He made a lot of money.
Like this, I'm so invested. I'm gonna get more into this. Is there anything that we did not cover when it comes to DeFi?
I would say the things that we did not cover are that there are things you can do besides just like making money. Let's look at an example. You know, the Black Lives Matter movement, right? That's going to make a lot of people mad or happy or whatever, depending on who's listening, right? But you know that movement, right? And you know that there was like an issue that came up where like, it was like, oh, the Black Lives Matter founder, she's got like, living in a mansion and she's got 7 cars and blah, 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 blah. And they didn't do nothing with the money except sell T-shirts and say stuff on social media. Think about it. You know anything they did? Right? I don't. I mean, I could be wrong. They might have done something, but that's the prevailing social media thing. I don't know
nothing that I can recall.
Yeah. There's nothing you can recall. It was like, man, they really made an impact here. That's where all that money went. So at the end of the day, right, regardless of that, whether they did do something or didn't do something, there was no accountability to say whether they did something or not. Right? And think about World Vision, right? Like that's like a big Christian charity or whatever the case may be. You give money and it's supposed to go to the kids and blah, blah, blah. And it's like, oh, only 10% was going to the kids and 90% was going to operations. Right? Now, here's the thing. When you give your money up to a charity, you have no control over what happens to the money once you give it to them. You just assume they're going to do the right thing. Yeah. Right? Now, with DeFi, there is another arm of that called a decentralized autonomous organization, a DAO, right? And when you have DAOs, you are able to set things up. Let's make it simple. Set things up in such a way where, let's say if all of us put our money together in one spot, it's in the DAO. Now, in order for the money to do anything or to move, one, it's on the blockchain. So every time the money moves, we have a record of it. So we know every single thing that happened with that money from the moment it ended up in that account, right? On top of that, you can set it up with on the blockchain that everybody has to vote on what happens to it. And you can verify the votes by, you have an account, we use our account to vote and we sign the transaction and say that we think it should do this, and whatever the majority says, that's what happens. So then now you can say that we said that this money was supposed to go to, ballerina, inner city, blah, blah, blah. Well, at the end of the day, we voted on it. Everybody said that's where it's supposed to go. And so that's the reason why that $100,000 left and went to ballerina city, blah, blah, blah. So whatever they did with it after that, fine. But you can track everybody who put money in, how much they put in, what their stake was. It's public. Anybody can read it and see that you put 1,000, you put 500, you put 730, you put 147,000, you put 6,300, you put you can see that. Yeah. And you can also see that money went to this, then it went to this. This decision was made. That decision was made. Right. That's the other thing about when I was talking about Thales a little while ago. Thales is run by a DAO. So also all of the you put the money in or whatever to for the liquidity provision or whatever. But as you keep getting the tokens, the reason why they're giving the tokens out, the tokens are actually voting tokens. So the more you use the protocol, you can vote on what happens to the protocol. You get to decide, we should also be trading this. You get to decide, we should raise the interest rate to this. And we can, it's doable because of A, B, and C. And everybody can vote on what's happening to the environment. That's been created from Thales or or a lot of the other protocols. Thales is actually a really good example of it. Overtime Markets is also part of that same DAO. So then they can, you want the Summer League to be on there? Mm-hmm. If you got votes, you can bring it up and say we should have Summer League voting on here or whatever, and they'll add it or won't. That's why they have the Premier League and all these other stuff on there. So you get to actually I don't know if you can't really make FanDuel do anything, but you can make Thales do it. And you can make Overtime do it. So that's something that wasn't possible before. And the reason why I even bring up Black Lives Matter, because we think about also the civil rights movement, right? Black Lives Matter was supposed to be the second coming of that. Didn't happen. Probably needed a better name, probably to me. Yeah. but at the end of the day, the civil rights movement or whatever the case may be, there was a lot of monetary issues that were there. Like their main claim to fame. Not if they claim to fame. I shouldn't say it that way. But, the Montgomery bus boycott, the reason why it worked, though, is because everybody really said, we're not getting on the bus.
Yeah, right? that's when they were sticking together, because they just, I don't know what's
sorry, I don't know why I'm laughing.
But everybody said, we're not getting on the bus. So, so they lost a whole bunch, they must have lost a bunch of money. But they didn't have ways to easily redirect money. And also there were banks that didn't want to bank them. There were third party, providers of insurance and all that stuff like that. They were shutting off everybody's car insurance and all this different type of stuff like that. But if those things are controlled by DAOs and, et cetera, there is, we can be talking about that for forever, because it's
it kind of makes people have more accountability though. Mm-hmm. So that could be why a lot of people or banks aren't for it.
Exactly, because banks work for the elite.
Yeah,
and we're not them. At least nobody here is one of them.
How you know?
Yeah. Zach, say it. Say speak for yourself.
Say speak for yourself. You know what I'm saying? We are the 1%. I'm just here for fun. That's it.
Oh man,
I love that.
But yeah, so yeah. We can talk more about DAOs another time and all the stuff, but that's something we didn't talk about.
Perfect. Well, that concludes episode 6, guys. If you have any questions, make sure you comment them, like, share, and subscribe.
And put a little money bag in the comments if you have some DeFi.
Yeah. Or some questions about DeFi that you want us to touch back on, okay? Perfect. See you guys later. Look at me. What's up, G-Way?
In a cup. No? Come on. Hey.
Bye for now.
Bye.
I'm the one that you should call when you learn to code. Success follow me around if you didn't know. From the bottom, so the top, the only way to go. Yeah, man, they call me Mr. CTO. I'm the one that you should call when you learn to code. Success follow me around if you didn't know. From the bottom, so the top, the only way to go. Got in this game from a humble beginning, but now we win and came up.